Hey everybody, good morning. Good morning. It's pretty early in the morning here. It's just a little after 8 in the morning Eastern time, and I'm here to take a look at the S&P 500. Just a couple days ago, I created a little video, and I talked really about how to find tops on the S&P 500 and what warning signs would look like. And well, okay, here we are. We are seeing, we had a pretty red day yesterday, and down 1.6, 1.7%, and then we're seeing a bit of a gap down today. And I want to take a look at this and see where the path may lead us. Before I get into all of this, as you all know, not financial advice, not your financial advisor. You're responsible for your own trades, manage your own risk, doing your own research. Just my opinion on the market here. If you would like to, talk and collaborate, you can find all of that information on how to get in touch, to how to access our Discord. You can find all that information on BitDoctor.org. And so let's go ahead and move on into the chart. So I'm going to start here just looking at SPY, right? We're just going to just keep it right here on SPY, keep it simple. And I want to start by looking at what we saw back in April, okay? So what I'm going to point out here is, we had a high here, and this was, about, mid to the end of February at about, at about 613 or so. And then we had our first pullback, right? So we had our first pullback, so corrections come in waves of 3. Right, so that first pullback that lasted roughly 22 days, and it 16 trading days, 22 days. It took us to go down about 10%. Then we saw nice little rebound, right? So actually, let's go ahead and measure how long did it take for that rebound to complete. So that was about 12 days or 8 trading days, and we went up about 4.8%. So that's a pretty significant bounce there. And I think one thing that I'll point out is anytime you have a bearish correction, there's always decent rallies that do tend to occur. And 4.85%, that's a decent bit over the course of about a week and a half or so. So that's something to take note of. But that's our pullback. Now, that third wave, usually, at least what I have observed in recent history, is that the S&P 500 likes to correct to the 1618 and stop. And if you just take a look, that's pretty much exactly where it fell. And if you then take a look, at the next day, we had a big gap up, but it was kind of sold into. But we had Wavemaster that was saying like, hey, this is probably a bottom. And we had a correction down here to the 1618. All of these things kind of led us to believe that this was basically the potential for a bottom. So now, of course, here we are, right? We're all the way up here. If you take a look at the 50 simple moving average, the 50 period simple moving average on the daily time frame, I'm going to zoom in here just so we can kind of take a look at this. Right now that's sitting right here at about 668. And we are going to be opening, assuming we don't have any major movements here leading up into the market open, we're going to be opening at 665.50 or somewhere in that range. So we're actually going to be opening about, about 1/3% below this moving average. So that's kind of important because we haven't opened below this moving average. Gosh, it actually is going to be going back to when this major correction started, right? So we really haven't closed, or sorry, not closed, but we haven't opened a candle below that 50 period simple moving average since we reclaimed it all the way here. This would have been on about April 30th or so, May 1st. And so I think that's important to mention, right? Because where I'm going to go next here is going to be just talking a little bit more about finding those tops. And then we'll talk about, measurements and where it may lead us and all of that good stuff. So if you go back to the chart that I had shared in my last video, what I will say is, I talked a lot about the divergence on VIX, which we have already experienced. We started to experience this way back on August 28th, right? We have higher high, higher high, higher high, higher high. But VIX keeps on creating higher low, higher low, higher low, higher low, and of course we had this right here, which was, after a big spike in the volatility index, and this was after a big pullback in the S&P. We had a 1-day major pullback, and then we had this day right here where VIX basically, spiked all the way up here, and we saw a pullback as the market rallied higher, but VIX did not create a new low, compared to this, pseudo trend line that I had been kind of keeping track of. We didn't create a new low, and that's the important part to this. We created another high after a significant spike in VIX, but when we saw, that new high, we didn't create a new low. So that was the first indicator that we may be seeing a significant top in the S&P 500. And if you take a look, we had that significant high right there, and we had, a really decent pullback, right? And you can't, again, as I mentioned before, you can't use that alone, the higher high, as a measure of weakness. You have to combine it with something else, which in this case, I use the 250 period simple moving average on the 30-minute time frame, and I'm looking for a break of that. And when you get a break of that, that's when things can start to confirm and start to accelerate. So if this is going to be a significant top in the S&P 500, the next question obviously is, all right, where do we go from here? All right, so first off, going back here to SPY, I'm going to go to the 30-minute here on SPY so that we can see a little bit of granularity here. And we're already starting to see weakness and volatility in crypto as well. Now, this isn't a crypto video, but, we all see that Bitcoin is sliding. A lot of stuff is sliding. Ethereum even is back down, around $3,000. That's pretty significant when it was, way over 4,000 not that long ago. So for SPY to be gapping down the way that it is, you've got a couple things that we can look at. So first, not even measuring anything, we're going to pull into some demand, or at least there was some demand here, again, not that long ago, right? We had good demand in this area. So I would expect this is probably going to be some implied demand, right? So this is implied because we had a significant bottom there, and if you were in our Discord, you saw we capitalized off of that demand zone in a significant way, right? We had some major trades off of that demand zone, and even going into the next trading day, those 2 trading days were probably some of my best trading days that I've had. But getting back down here, one of 2 things is going to happen. We're either going to find some support there again, or we're going to break through. So if we're looking at this as a correction video, let's just go ahead and kind of measure things and see where they may go. So what I'm going to do first, measure from the top to the start of the correction. Take a look at that pullback. So we went beyond the 618. Initially, it really did actually look like we were going to reject initially off of that 618. Now that obviously didn't happen. We eventually found some support here at the 50, and then we started to go higher. So let me add a couple other points of reference on here. I'm going to add the 786. And that 786, whoops, let me pull the right tool here. That 786 is basically where we rejected. So what I'm going to be looking for is a move down, initially at least, right? Probably going to see something like this, and then come down here to the 236. Okay, that's going to be, or really the negative 236. It's the extension off of that fib measurement. So it's going to be about 654.67, somewhere in that range. But would that actually be where things land, like where things finish? My guess is probably not. So let's go ahead, measure this again from our dominant pivot high to our dominant pivot low, and get it from the pullback. Now let's take a look and see where things may land if they correct in the same way, right? Just a similar way that we did back in April, okay? So what that would mean is really what we're looking for is the presence of a structure that makes logical sense. So we could have a 1, 2, and then a 3, 4, and then a 5. That doesn't fit. That doesn't match what a wave structure would look like. I would need to really dig in to try and find, some kind of a measurement, but even that doesn't look right. Right? Because, I can count a 1, 2, 3, 4, 5, but it still doesn't, there's too much overlap in my 1 and my 4 when you measure it this way. So I would be more inclined to look at this as an A and a B and a C. I think that fits a lot better. And what I would have expected there to be, and that's not what happened, I would have expected there to be an a B, and then a C, and then maybe we go for some kind of a flat. But that's not what it looks like is going to happen, because again, we're having a significant gap down here. And let me just tell you why I was really kind of favoring that is because when you measure from this dominant pivot low to this dominant pivot high, where were we at yesterday? We were finding some support, right at the 618. But now that we've gapped down, that really is sort of negated. That's not what I see really happening anymore. So the hedge that I have on SPXS, we got into that trade a couple days ago, and it's going all the way up till January, mind you, because when I take a hedge, I'm looking to buy time, but kind of keep it as close to the money as possible. But I'm buying time because significant tops do take time to play out, as we talked about for the April correction, right? That took a significant period of time. It took over a month. So I'm buying basically 2 months worth of time here for that to play out. So if that does happen, if that does continue moving, in a negative trajectory, what I'd really be looking at is a move down here to about 640, right? We'll go down here to 640. And, again, I would really have to try and dig here because this is just kind of messy. That would be a little ABC compared to the duration of this correction. This is much shorter. It doesn't really fit. So I would love to see, something along the lines of this start to play out, right? We get to, some kind of a correction where we have a third wave coming in here. But right now it doesn't, I don't really see the structure kind of agreeing with that at the time. But we'll have to kind of take that one day at a time here. But at the end of the day, I am going to be looking for something along the lines of this. So we've got, a 1, maybe we get a 2, and then a 3, and then a 4, and then we get our 5. And what that would or could set us up for is a 3, and then, again, trying to fit a 3-wave structure there, and then what we'd be looking for is really a 1, 2, 3, 4, 5, and that would be the completion of a larger A, B, C, again on a higher degree. So it would look a little bit like this, right? So let me just go ahead and mark these out properly so that they all kind of match the degrees and everything kind of lines up. That's what I would be looking for a correction like this going into the end of November. And, if and when we get down here, right, so if that does happen, let's go ahead and look at this from the hedge that I took. So this is on SPXS. We'll look at this on a 30-minute time frame. We are up above 38.41. And the hedge that I took was a 38 call for January. So this is going to open up in the money. So this is already looking good for the hedge that I currently have. If we measure this, again, the measurement's going to be a little bit different because of this being a leveraged asset. But the 1618 extension off of this goes all the way up to like 43. So if this does play out, right? So, if we do have something like this where we've got our 1, 2, 3, 4, 5, right? If we get something like this to complete that larger A, B, C correction, this trade is going to be fantastic, going all the way up to 43, because we're talking about a significant move, and there's going to be a lot of bears if that happens. There's already a lot of bears out there. We were talking about this on the Discord yesterday. Somebody posted a chart from AAII, which I do look at from time to time, but they brought it up. As of just a couple days ago, 49.1% of participants were bearish. Right? I'll go ahead and put the chart on here so that we can all take a look at it together. Right? We had a significant amount of participants that were heavily bearish. Right? So let me go ahead and change the transparency on this so we can see it a little better. 49.1% as of a couple days ago were bearish, right? If you take that even 1 week ago, we only had 38%. So we had over 10% of participants were bearish. Now, even if you go back 3 weeks, back to like the end of October, we were still lower, as where we are today. The 1 year bearish high, which would have been in April, right? And this is something that's key, right? That happened in April when we were starting to create a bottom, guys. We had almost 62% that were bearish. When these numbers start to fluctuate in significant ways, that's going to be when you're likely going to see a pivot, either to the upside or to the downside, right? So that's where we're at, and that's why the herd is usually wrong. So what we're looking at is we're already seeing some significant bearishness that's showing here, and I would say that that's probably going to increase if this does happen to play out. Again, I'm not going to talk too much about how that's going to impact crypto. I did post a chart that I did publicly post onto Twitter. Or X. I posted that, just a few days ago. It might have actually been yesterday morning or maybe 2 days ago. That talked about a bearish scenario on Bitcoin, right? So a bearish scenario on Bitcoin would have been Bitcoin dropping eventually down to about $70,000, right? And at the time, Bitcoin was about 105,000. Where's it at now? Yeah, we're below 100 now. So that's not to say that everything is dead. That's just saying that these are healthy corrections, right? If you take a look at Bitcoin, going back just a couple of years, we went from $18,000 to $126,000, and now here we are at Bitcoin like 95,000, and everybody's freaking out. Like, you're still like 4x from where you were a couple of years ago. Everybody gets so caught up in the right here, right now, because everybody's in the I got to trade right now, I got to make this trade, I got to make this trade. Then you end up over leveraging yourself, and you're not looking at it in the long term. And maybe you are, but you're focusing too much on the short term, and your short term trades shouldn't define you. Your short term trades should be what you can use to make a quick dollar, things like that. But you got to have the risk management in there so that you're not screwing yourself. So today at the open, we're going to open down, and it's going to be a pretty significant move to the downside, right? So if we take a look at SPY, right, from where we closed to where we're at now, we're going to open down about 1%. Let's just look at it from the SPX index. If we go down 1%, right, that's going to be about a 67-point drop from where we closed yesterday. That is, it's a pretty significant drop. We saw a significant, roughly 100-point move. If we go back here to this day, we had almost 100 points, right? It's about 98 points that we saw from the bottom to the top, and this, again, was last Friday. And so we're going to continue to see volatility. 100-point moves on a 6,700-point index, that's not a lot, but 100 points can make or break a lot of people. So you have to make sure that you are giving yourself good risk management, because trying to trade zero DTE options when you don't know what you're doing on a big gap like we're going to see today, that could basically screw you, or it could make you. That's really where I'm looking right now. You have to know what you're doing. If you need help, you know where to find me. You can find me on Discord. You can find me on X. Send me a DM. There are free ways to join our Discord. You don't have to pay to be there. And I am there all the time. If you have any questions at all, I'm there. And I'm there to provide my opinion. And whatever you guys need, I'm there. I'm always there. I've been there since 2017, And it's just really really interesting how I just kind of stumbled upon a community that was being abandoned, and it was very disconcerting. And so I just decided that I'm just going to go ahead and start my own little community. That's what I did. And I wasn't looking at it to like make a quick buck. I'm legitimately there to talk to people and help people and just give my own opinions on what the market is doing. And I've been there this whole time. And if you want to be a part of that, you can find all of that information on bitdoctor.org. If you need access to the indicators that I use, and I've been creating some new indicators, I don't really talk about it a whole lot, frankly, because I don't need to. I'm not here to create hype or to create some sense of urgency like, oh my gosh, you need to have this, you need to use this. No, I'm just here to help. That's really the only reason why I'm here. So anyway, I'm not gonna get into all of that stuff, but I just wanted to point out that there are free ways to access our Discord, and if you need help, if you're a new trader, if you just have some questions, just join, and you don't have to pay to be a paying member of our Discord. Just join if you have questions, because I legitimately want to help you. And I want to provide my opinions. And so, you can find that information, again, bitdoctor.org. And I think there's also a link inside of the video description to join the Discord. So, all right, guys. Hey, thanks for listening to the last part of that. I just kind of wanted to, talk about that just a little bit here. So we've been going for about 20 minutes. I appreciate you all. I really do. And I guess I'll just go ahead and end it with my typical last but not least, wherever you are in the world. I hope you're having a good day, great night, and a great evening. Take care, everyone.